Hey guys, hope you and the families are doing well. This short video is going to cover two main topics in trading. One, I'm going to teach you what I think is one of the most powerful swing trading breakout setups. And then two, I'm going to teach you an opening range breakout order entry method technique, which is a real mouthful, isn't it? To open the position, to initiate the trade. So you can see here, Trader Tom, as I refer to him in our trading community, posted about the trade that he took in DXYZ off the first 15-minute candlestick and free roll. Good volume coming through in the first 15 minutes, which I like to see with these types of trades. This was Trader Tom posting about it on the 4th of December. So what I'm going to do is take you through the trade that Trader Tom, as I refer to him, was targeting in DXYZ. Now this is a very explosive swing trade. You can see the move here going from low $40 to mid $60, pushing $70 in a couple of sessions. So it's a very explosive trade in a very explosive stock. So you're going to learn all about momentum leaders. And then I'm also going to take you through the 15-minute opening range breakout where Tom was targeting the trade, placement of the initial stop loss, and some of the key things to be looking for. So this is going to be a very thorough, very in-depth video. Hope you learn a lot from it. Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. If you are interested in a discounted trial, you'll find a link to that in the description and the comment section below. So we'll begin the video with an overview and then we'll start going into the details as the video progresses. So we've got two time frames loaded up at the minute. We've got the daily chart on the left hand side and then we've got the 15-minute chart on the right hand side. Now the first part of the video is going to focus on the daily chart, so over here, and I'm going to teach you the very specific setup that Trader Tom was targeting, which is this what I call a trigger bar, this low volume inside bar sitting just above the 10-day EMA in the context of a flag type pattern. So we're going to go through the setup on the daily chart in depth at the beginning of the video. Then as it progresses and we get into the second part, we're going to move across and draw our attention to the 15-minute time frame. Now why is that? Because Trader Tom was targeting a 15-minute opening range breakout, an ORB, as the order entry method technique. So the two key takeaways from this video is going to be one, the setup on the daily chart, and then two, how to trade 15-minute opening range breakouts, which is then also applicable if it's the 5-minute, the 15-minute, the 30-minute, the 1-minute, the 2-minute. Okay, opening range breakouts are pretty standard for the types of characteristics you're looking for and thinking about the risk to potential reward in the moment. So yes, it's going to be an advanced video. It's going to be pretty in depth as well, but trading is pretty advanced. Trading is in the details. So that's what we're going to be going through. So let's start over here on the left hand side, which is the daily time frame. Now, before I start talking about the actual setup here in terms of the candlesticks, the volume, the relative strength line, I want to draw your attention up here. You see it says ADR percentage, 17.87%. You may be like, why are you talking about a percentage up there? You should be talking about the candlesticks or this or that, something more interesting. This is really important up here because this stock here has a 20-day average daily range percentage currently at the time of filming this of 17.87%, excluding gaps. So what does that mean? Well, the average daily range, the movement of DXYZ over the last 20 days is 17.87%. Could you imagine if the triple Qs or the S&P 500, the SPY ETF, was moving, the range was 17% on a daily basis? You'd think, what, this is so volatile. My money's going up, it's going down, it's going up, it's going down. Okay, the average daily range percentage of the triple Qs and the S&P 500, the SPY ETF, if you took an average of those two, it's around about 1%. Okay, it's 1%, the daily range excluding gaps. Okay, triple Qs is usually a little bit higher than the S&P 500 as shown by the SPY ETF. Okay, but if you keep in your head, the average for the major indexes in terms of the 20-day average daily range percentage is around about 1%. So this is indicating DXYZ is 17 times quicker, 17 times more volatile than the major indexes. This is a quick stock. This is a momentum leader stock. Some of you may be familiar with that terminology. Okay, a momentum leader. DXYZ is a momentum leader. My dyslexia may say these things the wrong way around. So if I suddenly start saying DXYZ, it's my dyslexia. Okay, it's having an absolute field day with this ticker over here for whatever reason, right? But it's the point here is it's 17 times quicker than the major indexes. This is a volatile stock. So if you see here, okay, this stock powers out from where Tom's pretty much entering the position. In about 3 sessions, it goes up about 50%, more than 50%. Okay, this is the point of trading a momentum leader. So it actually only goes up around about 3 times its 20-day ADR percentage. It would be the same as the triple Qs going up about 3% in the space of 3 sessions. It's plausible, it's doable, it happens, or potentially going down 3%. Okay, as much as this stock went up 50% in 3 sessions, it could go down 50% in 3 sessions because of the 20-day ADR percentage. Now, I use an indicator on TradingView. If you just search ADR percentage, you'll be able to find various different ones. You can then compare it to DXYZ as well, okay? But ADR percentage is really important to, one, think about the volatility of the stock, but two, to gauge initial risk against, which we're going to be talking about when we get over here on the 15-minute opening range breakouts, okay? We're going to look at this initial risk of just over 4% relative to the 20-day ADR percentage as a metric. Okay, so a couple of things to note here is when you're trading these flag type patterns in these proper momentum leader stocks, so anything with like a 20-day ADR percentage of 8% and 10% and greater is going to be like in the momentum leader bucket. That is a quick stock we're potentially looking at there. So a couple of things to notice. On the rally here, the stock powers up about 369%, okay? Note the huge relative volume. See this black line running down here? This is the 30-bar average. It's huge and sustained relative volume, okay? Now, when the stock pulls down, do you see this is really subtle, but this is where the details come in, okay? The quickest stocks and the best stocks, when they set up these flag type patterns, we're specifically looking at a flag type pattern here, okay? It pulls down and it finds support around this black moving average. Now that black moving average is the 10-day EMA. Okay, this black line here is the 10-day EMA. Do you see how it finds support? It doesn't have to be to the penny, to the cent. Do you see how it finds support around that key daily moving average? This is what the creme de la creme do. This is where you build out your mental representations. So you really want to thoroughly understand, okay, hang on a minute. There was this flag type pattern that formed here. The stock then went up about 50% in the space of 3 sessions. What did it do? What were the common characteristics? What did I see? What did I notice? What do I infer from a supply and demand perspective? And then you go look at another 100, another 200, another 1,000 of these, and then you start noticing, wow, it's the same thing keeps happening. These common characteristics in stocks that display this tendency to then power up like that, this is what they tend to do. This is what they tend to exhibit. This is what you tend to see. So this is where Peak by Anders Ericsson, fantastic book. Peak by Anders Ericsson, all about deliberate practice, building your mental representations. So as you're watching this video, you're helping to build out your mental representations, that database in your head to go, hang on a minute, I remember when I saw ABC stock, DFC stock, I remember when I saw this stock, this stock, this stock, do that. It exhibited characteristics like that. That's what Trader Tom was doing. His mental representations were on it, absolutely on it. So you see here, bounces around the 10-day EMA, pushes up, bullish synchronicity. What does that mean? There is a synchronicity between the positive price action and the high relative volume. Look at the volume coming through on that bar right there. You see that? Bullish synchronicity. Really nice bounce off the 10-day. And then it tops out here, pulls back down, bounce off the 10, off the 10. So then again, it's finding support around the 10-day EMA. This is what the creme de la creme tend to do. And then what you get here is a really nice inside bar. If you followed the channel for a little while, you know all about trigger bars, okay? Trigger bars are often low volume inside bars occurring around one or more key daily moving average. It doesn't have to be an inside bar, but I do like it when it is an inside bar. So this is a 10-day EMA inside bar, trigger bar, right? And look how the volume is dried up. What is that telling you? It's telling you there's not much supply. And again, it's a timeless principle of the market that the market, stocks, ETFs, Bitcoin, cryptocurrencies will move from periods of contraction to expansion. Okay, this is the work of Toby Crabell, okay, billionaire hedge fund manager. From periods of contraction come expansion. From periods of expansion come contraction. So if you look here, DXYZ goes through a period of expansion. It goes up over 300% in about a week. Expansion, right? And then what happens? It goes through a period of contraction. So the period of contraction, although it is very volatile given the 20-day ADR percentage, this basing pattern, this flag, is a period of contraction. And then you have contractions within the contraction. Sounds like we're talking about kind of going into labor and stuff here, isn't it? But then you have periods of contraction, such as here where it really starts tightening over kind of a 3-day basis, and then here over a 1-day basis, get really tight with this inside bar. Okay, so you want to be aware of expansions and contractions across multiple durations. So Trader Tom is then targeting it through the high. Okay, what he's looking for is an ORB to power through the high of this inside day, which is on the 3rd of December. Okay, so Trader Tom has identified this inside day, low volume, setting up, flag, really strong stock, strong theme of the market right now, okay? DXYZ, at the time of filming this, had about 36% of their portfolio in SpaceX, which to my knowledge is a space-related company, and the space theme has been really strong. You think about Luna, you think about Rocket Labs, you think about there's SATL, there's Planet Labs, there's loads of them, okay, that are really, really strong. So it's also in a really strong theme of the market. I won't go down that rabbit hole too much. You've also got, look at the RS line. RS line, the relative strength line, turning up as well. Look how the volume is drying up from left to right in the base. Look at the sustained period around about a week, just over a week. A volume consistently below the 30-bar average as it starts tightening around the 10-day EMA. Really, really, really good setup. So that is the setup there. So in terms of looking for it, you want to have, if you're looking for the momentum leader type stocks, look for stocks that have ADR percentage greater than 5%, maybe even pushing like 8-10%. What do you notice about the setup here? Well, it's above the 200, it's above the 50, it's above the 65-day EMA, it's above the 21-day EMA, it's also above the 10. So then you can start screening for those type of criteria. You could put a liquidity filter in there as well. Okay, 30-day average volume greater than X, say 250K or 500K. You could do it an average dollar volume as well, above 10 million, 25 million, 50 million as well. It depends how onerous you want to be there in terms of the screening. But that there is a ridiculously good setup. Ridiculously good setup on the daily chart. Now if we transition across to the right hand side, this is the 15-minute time frame. Okay, so let me just give you a quick overview of what you're looking at here. Okay, these vertical lines that are going down the chart, these are the daily sessions. Okay, so from here to here is the daily session shown on the 15-minute chart. So what I'm circling here, you see this day here. Okay, this session is this trigger bar, this inside day here. Okay, so I'll keep them circled like that so you can see. Okay, the 3rd of December session there is this session in here like this. Okay, and then you can also see the date down the bottom. Okay, so look how tight the daily range is. Okay, not much going on, clustering around some of the key moving averages that I keep on this time frame as well. Okay, sells off a little bit, kind of recovers, tight again from periods of contraction. Now we're seeing the contraction on the 15-minute chart here, come expansion, and then you see expansion, period of contraction, expansion. It's just how the market wiggles and jiggles, right? But before we start talking about this 15-minute ORB, let me just wind back a little bit. Okay, now here's a subtlety, here's a little nuance. Remember that I was talking about finding support around the 10-day EMA. So the 10-day EMA, if you look at the prior session, so that's going to be in here. I'm just going to remove some of this, right? This is getting a little bit busy, isn't it? So let's just remove some of this. You see the prior session, which is going to be the 2nd of December. You see that right there? This bar here. See how it bounces off the 10-day EMA. Now if we were to go and look at that session, which is going to be this session that I'm circling here, okay, this is the 2nd of December. Note how, okay, price pushes up, pulls down, and then what bar do you see marking the low of the session? See that bar right there? What is it? It's a shakeout demand tail, an SDT, a shakeout demand tail, 15-minute shakeout demand tail. Those of you who have followed the channel be familiar with trigger bars, shakeout demand tails, gap down reverse bars. So what you have marking the session low of the 2nd of December is a shakeout demand tail, and it's right there on the 10-day EMA price level. So this indicator that I've got on my chart is putting the daily moving average, such as a 10-day EMA, across the intraday chart as a reference point. So what I see is DXYZ pulls down to the 10-day EMA, bounces right off of it. Textbook, love it, great. Someone is supporting the stock around the 10-day EMA. That is what the creme de la creme tend to do. You can see the bounce here, you can see the bounce here, you can see the bounce here, you can see it here, right? So this is a really constructive bar to see on the low. And then it also transitions, if you're just looking at these two sessions, a bit of a cup and handle, right? Patterns within patterns. No, I said patterns. Patterns within patterns. Queen's English, Jack. Okay, patterns within patterns. And then the handle over here is a period of contraction. And it's forming in this little cup with handle. Fractal nature of the market, right? So let's go on to the opening range breakout, right? Because I'm waxing lyrical about this and this. So let's go into the 15-minute ORB. So what Tom is looking for, okay? He's looking for, Trader Tom is looking for a break through the high of the trigger bar session, okay? That tight low volume inside bar on December 3rd. Now the high of that bar is $43.08 as shown by this purple level, okay? This purple line run across it, $43.08. Now that is running across the high here. You see that? $43.08. So what Trader Tom is looking for is when price starts moving through that high, okay, when price starts moving through that level, what he wants to see is signs of strength. He wants to see willing buyers. He wants to see interest. You see interest via the volume. So you can see the pop in the volume coming through. So this is 15-minute. The first 15-minute bar breaks the high of the prior session, okay, and it's an okay candlestick. It's not bad, okay. You get this open there and then it kind of trades down. You get the shakeout demand tail, then it pushes up, it closes here. There's some interest in the stock. So then what Trader Tom is doing is thinking about the risk to potential reward. Now his initial stop loss, what he's going to do for a 15-minute ORB is target it through the high of that first 15-minute candlestick, stop loss 1 cent below the low of the bar. Now that equates to about 4.15% risk, okay, $1.83, 4.15%. Now relative to the 20-day ADR percentage, which is up here, okay, around about 17%. On this day, it may have been a little bit less because of the expansion, but even if it was, say, 15% at the time, okay, it's going to be less than 1/3. It's around about a quarter. Okay, it's really, really tight in terms of the initial stop loss relative to the 20-day ADR percentage. The better instances, they will usually be around about 1/2 to 2/3. This is 1/3 to 1/4. Like this is really tight relative to the 20-day ADR percentage. Now, if you were taking this trade on, say, the triple Qs or the SPY ETF, 4% doesn't make sense because the 20-day ADR percentage is around 1%. But here, because it's a third to a quarter the 20-day ADR percentage, it's very, very favorable. And again, think, this stock here from Tom's initial stop of about 4%, it powered up and went up over 50% in 3 sessions. It's over 10 to 1. Okay, this is the thing about if you can gauge your initial risk relative to potential reward and factoring in the 20-day ADR percentage. This is some really advanced concepts that are coming at you in this free YouTube video, but this is the type of stuff to be thinking about if you want to do this at a high level. Okay, so we're thinking about a lot of things when we're planning the trade out. This is why I dissect the trade into 4 main parts. Number 1, how do you identify? Number 2, then how do you control the risk? Number 3, how do you mitigate the risk? Number 4, how do you then optimize the profits? What are the selling rules and selling guidelines that you are going to be employing on this specific trade, and then adapting as new information becomes available. So it's identify, control, mitigate, optimize. That's the phases of a trade. Whether you're a scalper, intraday trader, swing trader, position trader, you identify, you control, you mitigate, you optimize. That is just the flow of a trade. So this here, what Tom is then doing, to get back on the ORB point, come on Jack, okay, through here, Tom's entry is right here on this bar. Okay, if I circle it, Tom's entry is going to be right there, stop loss right here, sent, low of the day. So then his entry is on this bar here, so you can see the entry candlestick that I pointed to with that marking, and his entry is around about 44.08, probably a little bit of slippage as it's powering through that. Really good continuation bar. See this again, bullish synchronicity. You're seeing bullish synchronicity here, but then you're seeing it here, you're seeing it here, and then next session, which is the 5th of December, look at this, more bullish synchronicity. Okay, really strong action, pushing up. You can then free roll into it. If you want to free roll into it, you then sit, let the trend unfold on the daily chart. But this is how you use the daily chart to look for the setup. Then you can dial it in here, specifically the 15-minute chart, to target a 15-minute opening range breakout. It would be the same kind of principle and philosophy there, whether you're targeting a 5-minute ORB, a 15-minute ORB, 30-minute ORB, 1-minute, 2-minute ORB, whatever it may be. But anyway, I'll wrap the video up there because it's a fairly long video. I think we went into quite a few nuances there in terms of things to look for on the daily chart, things to look for on the 15-minute chart. I love it when I see members like post and trade like that. I think is absolutely fantastic. I get a real buzz out of it, and that's why I kind of do the platform. But anyway, I'm running out of things to say about this trade, so I'll wrap it up there. I'm just rambling it then. Thank you very much for supporting the YouTube channel. Thank you very much for watching, especially if you made it all the way to the end, and I will see you in a future video.